Hello, this is Dan, and welcome to part one of our 2019 real estate market review and 2020 market forecast. Here in part one, we're going to focus primarily on the national market with a peek at a couple of regional and state trends. And in part two, we will dive into more specifics as to what's happened here in the Portland metro area over 2019 and rolling into 2020. Real estate is, of course, very local, but it's important to look at the national market as things do not happen in a vacuum when it comes to open markets like these. And the economy plays a role, if not in the direct actions of the market, but in the perceptions of those who may get involved in it. So it's good to have an idea of what's going on across the country, especially as areas tend to follow one another over time. It was about a year ago that most talk with regards to the market was about a slowdown. Every part of the country was in anticipation of it coming. This was in part due to so many years of rapid price growth that could not be sustained forever, but also with expectations that the country was headed for an economic recession. In fact, in 2018, a survey of top economists across the country showed that 67% believed that we would enter a recession by the end of 2020. As it turns out, by October of 2019, that number had been cut in half, down to 34%. And just a few months later, last month, in fact, in January of 2020, that number was cut again all the way down to 14%. What's happened then is the economy has remained very strong, and economists do not believe now, most economists anyway, do not believe now that we will see a recession by the end of 2020. This is evidenced, the strength of the market that plays a role in this is evidenced in part by these figures from Showing Time, which show buyer traffic across the country. Here out west, we had almost a 21% increase in buyer traffic year over year. But more importantly, across the country, traffic was up. The Northeast and Midwest were calmer in almost all elements, but still seeing pretty good growth rates year over year. Again, this points to a very healthy market. A healthy market is good for the economy as there is a ripple effect, and a lot of jobs and a lot of wealth generation come from home ownership. These numbers are further supported by existing home sale figures as measured by the National Association of Realtors, which we see here. In 3 out of 5 regions, year over year, sales growth was in the double digits, and in the Midwest and Northeast, they were still awfully close, averaging about 9% between the two of them. So we see again across the country, every region is experiencing significant growth and a very strong market. One of the things this has led to is a lot of questions as to why. But we saw 2019, says Lawrence Young, a chief economist at the National Association, we saw 2019 come to a close with the economy churning out 2.3 million jobs, mortgage rates below 4%, and housing starts ramp up to 1.6 million on an annual basis. If these factors are sustained in 2020, we'll see a notable pickup in home sales again in 2020. This helps point to the idea that the market is going to continue to stay strong. Some of those slowdowns that we've seen may not get to the place that people had thought they would, and price depreciation may not be coming, which some people had thought might come here in the next year or so as well. One of the things that all of this good news has led to, however, is a shortage in housing. This is visible in the rental market as well, but it's been especially strong here in the purchase and sale market, and inventories have been down across the country. And Bill McBride from Calculated Risk has said inventory always decreases sharply in December, when his report was finished, as people take their homes off the market for the holidays. However, based on the data I've collected, this was the lowest level of inventory in at least 3 decades, dating back to December of 1993. It's a pretty incredible statement, and I can say that in the 15 years I've been doing this, nationally, inventory has not stayed so low during that time. And here locally, where we've seen inventory below 3 months for a long time, and many, many months below 2 months, again, it's just not something that we can account for. It's not something we've seen in the past. It really is a historically difficult time in the market in terms of that supply-demand interface. The nationwide statistic that he was alluding to is on display here, where we see months of inventory of homes for sale from January of 2011 to January 2020. As you can see to the far left, that was the height of the recession, where nationwide inventory got up to 9.5 months. It has decreased rapidly as we came out of the recession, but then steadily in the years to follow, and by the end of 2019 had dropped all the way down to 3 months. Again, this just isn't something seen on the national level and not something that anyone had predicted. Good news, however, is available on the horizon, and that is that new construction starts have picked up. This is good news for obvious reasons, as the more new houses we have built, the more options there are for buyers, which frees up a lot of inventory because it creates new inventory instead of just relying on existing sales, which has been what's going on here for a number of years. And obviously the new construction taking off is good news, and it's something that we're happy with. But at the same time, we have to understand how far behind new construction is. This is the number of single-family home construction starts in single-family houses built over the last several decades. If you look at the 60s, 70s, 80s, 90s, 2000s, and then the 2010s, you see that in terms of housing starts per million people in the population, we have about half of what's been done or built in each of the previous 5 decades. So while it's good to see this number coming up, not a lot of construction over the last 10 years has hit the market, and that's part of the reason that we have such a housing shortage. Robert Dietz, who's the chief economist with the National Association of Home Builders, said the sales pace for newly built single-family homes ended 2019 with a gain of 10%, and this marks 2019 as the best year for new home sales since the Great Recession. Again, that's good news, but all things are relative. The best year since the Great Recession does not necessarily mean a great year historically. This is probably a little bit obvious. One reason that you can explain this is a lot of builders lost a lot of money during the recession and became gun shy when the market turned around, or they simply didn't have the money. And again, on the large scale, a lot of big builders wanted to start off small again because they did not want to wind up in a place where they had way too many homes built and not enough demand to take care of them. So many people have asked why it is that a year ago it looked so different than it does now. Here's Skylar Olson, who is the director of economic research at Zillow. A year ago, combination of government shutdown, stock market slump, and mortgage rate spike caused a long-anticipated inventory rise. That supposed boom turned out to be a short-lived mirage as buyers came back into the market and more than erased the inventory gains. As a natural reaction, the recent slowdown in home values looks like it's set to reverse back. Obviously, the slowdown we've seen nationwide and here in the Portland area has been pretty modest. So if the worst has gotten behind us for the next year or two, it wasn't so bad. I'm not sure that we here will see things turn around quite as quickly, as our numbers have not dropped as dramatically over the last few years, and things have not slowed up quite as much. Again, however, the recession not being right around the corner as people thought it was, we may see that the market picks up. Anecdotally, most agents I know have said that yes, here in January and February of 2020, it does not seem to be on the downward trajectory that it was toward the middle and late parts of 2019. Here we can take a look at price gains year over year by region. These numbers come from the FHFA, which is the Federal Housing Finance Agency group I'm sure you're very familiar with and spend a lot of time on their website. Anyway, they show 4.9% for us here out west in the Pacific region, but as you can see across the country, healthy price gains in all regions, the slowest being the Middle Atlantic with only 4% price appreciation. Bear in mind, however, that historically prices increase at an average rate of 3.6% per year. So the quote-unquote slow part of the country is still outpacing historical averages. These numbers here are from CoreLogic. Again, you see strong price growth throughout the country. Don't get too caught up in the fact that the numbers here look different than they did on the last graph. The Federal Housing Finance Agency and CoreLogic measure things a little bit differently, and so the numbers do come out just a little bit different. Again, not anything to get too caught up in. The general trend, however, is again prices going up. Here we see the forecast from CoreLogic for year-over-year price changes. Take-home message, once again, it's all in blue. If you have any questions about which part of the country are expected to see decreases in price this year, note that those are marked in red and that there is no red on that map. So no place in the country is expected to see prices go down this year, which is a sign of optimism for homeowners, but also a call to builders to supply more inventory and for buyers to get creative. We don't want to get too myopic in our two sources, so here's the Home Price Expectation Survey, mortgage bankers, Zelman & Associates, Fannie Mae, the National Association of Realtors, and Freddie Mac, issuing their 2020 and 2021 price estimates. These are a little bit more modest than the estimates we saw on the last chart. However, they all still suggest that prices will continue to go up in 2020 and 2021, anywhere from 2 to 4.5%, which again, in a quote-unquote slowdown period, is very good news, and we may see parts of the country actually outpace these figures as we move forward. Shifting specifically toward the buyer side, for anyone who thinks that all of this information is intimidating and makes it sound as though now is not a good time to buy a home, take a little advice from Dave Ramsey, who said, if you're looking at buying a house, home prices might look intimidating, but remember, just because you saw house prices that other people in the nation or your own town are buying, that doesn't mean you should look for a house in that price range. Instead, focus on your own budget. Don't worry about the pricing trends. A good agent can help you find a home that you love that's within your budget. And this is a very good point. We do have parts of town that have appreciated at different rates. We still have parts of the Portland area where prices are well below the median and a good home is available at what now seems like a reasonable price of under $400,000. Obviously, I say that a little tongue-in-cheek because it's still a heck of a lot of money, but in our area, what is deemed a first-time buyer price and what is deemed affordable has shifted a great deal over the last decade or so. Interestingly, here we also see that outside of home prices, there are some other factors that can change the mortgage payment, the monthly mortgage payment for buyers. Mortgage insurance requirements, obviously those are limited in terms of your control. Interest rates, which we'll come back to in a moment, down payment size, credit score, and debt-to-income ratio. All of these things can contribute to what a buyer is going to pay each month, where the interest rate arguably can have the largest effect on those things that shift, especially in the short term. So if a buyer is out looking and sees a drop in interest rates, it might be worth going for, but it's also worth noting that we're at historically low interest rates, and we have been for a while. We get a lot of questions about when interest rates are going to go back up. People started to get nervous last year when they edged into the mid-4s. Now that they're back under 4%, people are getting nervous if they're going to wind up over 4%. So take a moment and check out the table here. This provides just a little bit of historical context, and you can see where interest rates have been over the last couple of decades. Even though they're struggling or nearly, inching up toward 4%, people say, well, hey, is there any way they're going to go down to 3%? And I've heard rumors that they might, but that's a little bit of a gamble, and nobody's got a crystal ball quite good enough to say with certainty. But if we take a look, in the 70s, they were up over 8%. In the 80s, well over 12%. In the 90s, back over 8%. In the 2000s, well over 6%. And again, in the 2000s, averaged over 4%. So rates can't get a whole lot lower. And to be frank, trying to play the interest rate market and waiting to see until it's bottomed out is a bit of a gamble that even the professionals most of the time can't get right. And then lastly, as somebody once told me, you never know that the prices, or in this case, the rates, have hit the bottom until it's in your rearview mirror and they've already started to go back up. Speaking of gambles, it's also a little bit difficult to know exactly when the market has hit its peak because, again, you don't know until that time has passed. We don't necessarily think it's hit the peak now, but many people are starting to ask, is this a good time to buy, or should I wait a little longer and try and stretch this thing out a little more? Again, coming back to something Dave Ramsey said, when it comes to home prices for sellers, the main question is how much money can I make on my home sale? Now, personally, I think that's, of course, a very valid question, but I also recommend that people ask themselves, is now a good time for me to move? If you've got other people in your house or other people depending on you, is this a good time for them to move as well? The market will always work out in your favor in the long term. The question is, in the short term, is now the right time for you? Because again, trying to play the market perfectly can be difficult. And if you're selling one house to purchase another, what's good for you as an owner often isn't as beneficial to you as a buyer. So there tends to be some washing effect. It's interesting to note, across the country, on average in 2019, sellers realized a home price gain of $65,500 on their typical sale, which marked the highest level in the U.S. in over 13 years. That's just a whole lot of money. And we're probably seeing slightly higher figures here locally because we have higher than average prices than the nation does. And in a recent survey as to whether or not now is a good time to sell, in a National Association survey, 75% of people in the country said yes, and in another survey, it was just 65%. In either case, those are both very strong numbers. And if we look at those across generations, we see very high consistency. In this, again, this was a national home survey done. Millennials, as it should come as no surprise, had the lowest rate of confidence at 68%. The reason I say that makes sense is these are people who have owned homes for less time and therefore probably don't have the equity that older generations will have because they've been able to accumulate home after home. But also many millennials are still a little bit nervous about trying to play the market because their earliest memory of the real estate industry and the real estate market itself was the Great Recession 10 years ago. But across Generation X, young boomers, older boomers, and the so-called silent generation, we see at least 3 out of 4 people believing this is a good time to sell. We don't typically see these strong numbers across any market, so these are quite a testament to how strong the market has performed and how well people think it's going to serve them to be active in it now. So that wraps up part 1 of our market review for 2019 and the forecast for 2020. Again, taking a peek at the national level. If you have any questions about what's going on at the local level, feel free to reach out anytime and let me know. We can get you some information about what's happened in your area over the last 12 months and what we expect to come. Again, it depends on which part of town you are. The Pearl District saw prices drop last year, whereas Sandy saw the greatest jump in the median sale price. So there's a great deal of variation around town, and it's not always obvious what's performing well and what's going to perform best, but we're happy to reach out, get you some information you need, and then more importantly, talk about why you're thinking about making a move now, and we can put our heads together and see if this is a good time or if it is worth waiting for you. It's, again, my opinion that the best way to handle the market is to do what's best for you and the people that depend on you, more so than trying to play it specifically, especially if we're talking about the home that you live in. But thanks again for your time. I know this was a little bit data heavy, but hopefully the general message has sunk in a little bit. And again, let me know if you have any questions. In the meantime, we hope you have a great day.